Reserve Bank Governor Michele Bullock was asked today if she should accept some responsibility for our housing prices taking off during the COVID pandemic. Astonishingly, she said no, blaming a lack of supply and saying it's not the responsibility of monetary policy to look after housing prices. We certainly need more homes, and there not being enough pushes up competition and prices. But this RBA graph of the RBA's cash rate that it makes decisions on has a different opinion. Interest rates affect the cost of money. A low rate makes it cheaper to borrow, and in mid-2019, long before COVID, it was down below 1%. It then sat at emergency levels of 0.1% until mid-2022, even though inflation, which the cash rate is meant to control, had rocketed from 1% a year to north of 5% a year. So the RBA isn't to blame for our housing shortage, but it's got a fair bit to do with pumping demand and our sky-high prices. A flat day on currency markets. Gold now above $4,000 an ounce, the weight of a few batteries, up 50% in a year. Our market lower for the day and the week, but hovering near record highs. Global markets were lower, and in the US too, where things are tightening. The US government shutdown is in its second week, and US debt levels keep rising. Overall, the government in the US spent $6.7 trillion last year, but more than $1 trillion of that was on servicing debt. When you take the interest paid on debt compared to the value we create, our gross domestic product, the US is paying nearly 4% of GDP on interest. Australia, just over 1.5%. And that's finance.